Good day, everybody. It's Trent Klarenbach with the Klarenbach Grain Report. Today is November the 19th, 2025. We're at a decision point for canola. I'll show you what I'm looking at here. This is the canola futures chart. It is a continuous chart. It's using the January 26 contract as the price. Quick review. You will recall how we suggested that a good strategy would be layering sales from 638 up to 658. So layering sales allows a person to capture sales on the move up and not miss any, at least take some profits off the table on the way up. Now we're finding some resistance, I would argue, from the 656 level, and we haven't had I think our highest close of this past week was 655.90 on my chart here. So we're finding some resistance from this fib level, this 38.2% retracement level. We haven't got to that 660 level, which I anticipated we might. We got as high as, well, just under 659, so it's probably close enough. What happens next? Typically what happens when you hit this Fibonacci level, you get a retracement back down to the 23.6. That's at a 633 level. So what I'm anticipating is a pullback to that level now. That would align nicely with this rising 50-day moving average in green here. And that's important because that's a sign of an intermediate uptrend, I would argue. So the problem is we have this purple 200-day moving average overhead, and that's going to act as some sort of resistance. Now, I don't know, it's hard to really guess what's going to happen next, but often you see a resistance at this 38.2% retracement, a pullback down to this 23.6 at 633, and then maybe we get a rally up to maybe as high as 674, maybe all the way up to 690, up to the 700 region. It's too early to make that call now. We have that, I would consider, serious resistance above 660. Mark reached out the other day and he asked me about June, July pricing. And he said, is this a good price? Now, the problem with what is a good price? I always struggle with that question. That's probably best for you to answer. We used to think $13 was a good price at one time, not too many years ago, and now we have expectations of higher, so I'm not sure what a good price is anymore. But if you're profitable at that level and you can wait and your cost of carry supports delaying sales and pricing canola to that point in time, then I think that maybe it's probably a good idea to take some risk off the table. Now, again, I think we're going to see a pullback down to that 633 level. It's likely to impact next year's contract months as well, too, back into July, for example. Let's just take a look at July right now. And there we are. So the reason I was thinking that canola is going to rise, I think canola's got higher to go. I think it does. And the reason partly is because this rising 50-day moving average in the July 26 contract. We're testing this previous resistance here. Maybe we get a pullback and get another rally, but the problem with these pullbacks is you don't know how far they're going to go. So you need to take some risk off the table, in my opinion. And we have some serious resistance, I would say, at the 650, 660 level. And I think it'd be a good opportunity to take some risk off the table and make some sales. Now, there's other supporting evidence for this, and I'll get into this more into the soybean charts and the soybean oil. I'll just look at soybeans quickly here. You will remember, this goes back to August. I cleaned up my chart a little bit here, but I had this pattern here and identified 1144 as a possible price target at the question mark up here, suggesting that. It went right to that level. We haven't had a closing week price above that 1144 level yet. In fact, it's at 1143 right now. What's going to happen next? Again, a similar idea to the canola. I think we get a pullback down to, I don't know, maybe probably down to 11.15, maybe all the way down to 10.60, 10.80, somewhere in there. And if that happens, it's likely going to reflect on canola. Also, we look at oil. People are talking about oil, breakout in oil. This is, again, my charts get a little messy, but you have to trust me. We found some support from this 50-week moving average, but we're testing this other fib level right now. So there's a lot of heavy lifting overhead. I'm not so, when I look at this soybean oil chart, I'm not that bullish on it at the moment. The reason is we broke below this rising 2-week moving average. We came back and we tested it and found resistance there. Anticipate that to happen. We need to get above that level, above 55, before I become bullish on soybean oil. Until then, I have to remain cautious. And if soybean oil doesn't rally, then I don't think canola is going to rally. And it's just one of those things. These things move in conjunction with each other, and I think we have to look across multiple commodities to get a sense of where things are going. So right now, my thoughts are to take some risk off the table, continue making those sales, look for a pullback on canola down to 633, and that might provide another opportunity for a long position on the futures market. If you don't have a futures account, I encourage you to get one. I encourage you to consult with a broker. I can help you out with some ideas, but you really need to have this tool in the toolbox. You need to have a futures account, in my opinion. Take some risk off the table. You can sell canola now, and if we get a rally, you can still participate in that rally on paper. It's lower risk, more liquid. Doesn't require hauling grain in the wintertime. My name is Trent Klarenbach. Sunny in Saskatoon. Life's good.